Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. I trust you've had a great weekend. Right, before we start today's session, right, let's take a look at the disclaimer. Right, please take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, before we dive into the charts and trading view, let's take a quick look at what's up on the economic calendar for this week. Right, we've got quite a few things going on. We've got four major central bank announcements, and in between, we've got US consumer inflation data as well. Right, so coming up on Tuesday, 10th of December, the Reserve Bank of Australia, or the RBA, will release its monetary policy statement, followed by RBA Governor Michelle Bullock's press conference. And then later on that day, we also have consumer inflation data out of the US. And after which, we also have another central bank announcement, this time by the Bank of Canada. And then on Thursday, we have and that's a US CPI is on Wednesday. US CPI is on Wednesday, followed by the Bank of Canada's monetary policy statement. And then on Thursday, 12th of December, we have the S&B and the ECB both releasing their respective statements and conducting their press conference as well. So looking at the RBA, right, they're going to release their monetary policy statement on Tuesday, 10th of December at 3:30 a.m. GMT time, where they're expected to maintain the cash rate on hold at 4.35%. This would mark the ninth consecutive pause by the RBA, and then Governor Michelle Bullock's press conference begins at 4:30 a.m. GMT. Right, so if we do see the RBA maintain the cash rate at 4.35%, and then we see a press conference that's pretty hawkish, we may see demand for the Aussie pick up much more stronger in as compared to recent weeks. And then on Wednesday at 1:30 p.m. GMT time, US consumer data will be released, CPI data will be released, which with the forecast showing monthly CPI rising 0.3%, slightly higher than 0.2%, while headline CPI is expected to accelerate from 2.6 to 2.7%. So should we see another month of hotter than expected inflation data, and this could likely trigger further demand for the US dollar. Later on that day, at 2:45 p.m. GMT, with the Bank of Canada expected to reduce their overnight rate by 50 basis points to bring it down to 3.25%, followed by Governor Tiff Malcolm's press conference at 3:30 p.m. GMT. So the loonie has already come under significant selling pressures, right? The loonie has depreciated significantly since the end of September, and this rate cut is quite likely to weaken it even further. And finally, on Thursday, we have the S&B and the ECB releasing their respective monetary policy statements, as well as conducting their press conferences as well. Right, so we have the S&B expected to make a 25 basis. We have the S&B expected to make a 25 basis points cut to bring down their key policy rate to 0.75%. And the ECB is expected to reduce its main refinancing rate by 25 basis points as well, bringing it down from 3.4% to 3.15%. And after which, the press conference by ECB President Christine Lagarde at 1:45 p.m. GMT will be closely watched as well. All right, so these are the key events lined up this week, right? In total, we have four major central bank announcements, and in between, we've also got US CPI data and PPI data sandwiched in between. All right, now with that, let's move on over to the charts and trading view, right, and begin the analysis for today, right? So here we are on the dollar index. I'm on the daily time frame here, and we can see the dollar index was initially rising quite strongly this morning, right? However, it seems to have stalled at around 106.20 and is looking to fall lower, right? Nevertheless, right, we can still see, if we do see a hot inflation data being printed on Wednesday, right? Come Wednesday, if we see CPI coming in hotter than expected, we could see demand for the dollar pick up, and we could potentially see the dollar index reach its pivot level at 106.92, right? This is a nice overlap, almost like an overlap resistance level. that's accompanied by 50% Fibonacci retracement, right? So this retracement level was found starting from this swing high on 22nd of November, going down to this swing low here on 6th of December, right? So this is where the dollar could rise into should we see hot CPI data once more on Wednesday. But for now, demand for the dollar is pulling back slightly, causing dollar index to dip under the 106 level once more. A little bit below, right? There's a nice overlap support at 105.15. There's a nice overlap support here. We can see this level previously functioning as support here, small support here on 20th of June, then resistance here on 10th of July, and very strong resistance here on Wednesday and Thursday, 6th and 7th of November. So this creates a nice overlap level, which has been used in the identification of the first support. And also we can see that there's a 38.2% Fibonacci retracement that accompanies it. This retracement was found starting from this swing low here on 27th of November, going up to the swing high here on the 22nd of November. Oh, sorry, starting from this swing low on 27th of September and going up to the swing high on 22nd of November. Right, and in terms of resistance, right, we're going to zoom out a little bit for that and go all the way back to 12th of September 2022, and we can see a nice swing low taking place here, right? There's a nice swing low support taking place here in September of 2022. Now this level is quite likely going to function as resistance as well, and we can also see it is close to where this latest swing high has taken place as well. So this is actually an overlap level at 108.18, which we have identified as the first resistance. Right, so these are the key levels here for the dollar index on the daily time frame, and we've got the RBA coming up tomorrow. Right, so let's move on over to the Aussie and see what are the key levels here for this currency pair. Right, so with demand for the US dollar waning today, right, we can see here this afternoon during the European trading session, right, the dollar index has been pulling back after rising as high as 106.20, and that is of course has caused the Aussie to rise up towards its pivot level here, right? And of course, should we see the RBA maintain its cash rate once more tomorrow, and if we see a press conference and statement that conveys an hawkish outlook, that's quite likely to fuel further demand for the Aussie, and we could potentially see the Aussie break above this pivot level by tomorrow. So take note, it is currently trading at the pivot level here, right? This is also a level that can be that probably has a Fibonacci retracement, right? We can run a retracement from here, 25th of November, this high on 25th of November, going down to this low here on 6th of December, last Friday. When we look at all the fibs, we can see that this pivot level is like a nice pullback resistance level that's accompanied by 38.2% Fibonacci retracement. Right, and with regard to the first support is a nice swing low support that has taken place here on Monday 5th of August. That's at 63.48, and this is also a level that's accompanied by a Fibonacci projection. This projection was found starting from 0.1 7th of November, going down to 0.2 14th of November, and ending at 0.3, which is on 25th of November, right? And if you look at all the key projection levels, we can see 78.6% aligns very well with the first support. So we're just going to keep 78.6% on the charts. There we go, right? And in terms of resistance, right, there's a nice swing low taking place here previously on 30th October, right? Nice swing low support taking place here, and this swing low support then proceeded to function as resistance as well on 20th of November and 25th. We can see on these 2 days the Aussie did rise up very close to this level here, creating almost like a nice overlap resistance at 65.55. So that's how the first resistance for the Aussie has been identified. Right, so take note, for now the Aussie is trading close to its pivot level at 38.2%, right? It could potentially pull back a little bit here. However, come tomorrow, right, the RBA is going to release its monetary policy statement at 3:30 a.m. GMT time, and if we do see a statement that's hawkish, and if we see of course the RBA maintain rates at current levels, that could provide further fuel for this currency pair. Right, okay, after which we've got the Bank of Canada coming up on Wednesday, 11th of December, right? Bank of Canada is up on Wednesday, and they are expected to make a rate cut as well. We can see that since the end of September, the loonie has depreciated significantly, causing the dollar CAD to rise from about 134.40 to as high as 141.77. Right, over this period here, we can see this currency pair from trough to peak, has risen almost 5.7%, or rising almost 760 pips in the process. So this is a huge move for the dollar CAD since the end of September here. Right, we can see today, right, the dollar CAD gapped lower, right? It closed at around 1.4160 last Friday. It gapped lower to open at 141.50. It filled that gap before reversing to resume the downtrend and is falling towards what I see is a nice pullback support level. The pivot level at 1.4093 is actually a nice pullback support level, and we could potentially see dollar CAD stabilize around the pivot and reverse the bounce higher, right? And especially come Wednesday, right? If we do see that rate cut take place, that is going to add further fuel for dollar CAD and continue to keep it elevated. So this pivot level at 1.4093 is a pullback support level. Now looking slightly below, there's a nice overlap level at 1.3946. This level previously functioned as a nice swing high resistance here on Monday 5th of August. It functioned as resistance once more on Friday 1st of November, and it functioned as resistance once more on Thursday and Friday 7th and 8th of November. This was a very significant resistance barrier, which then proceeded to function as support from Tuesday 19th of November till Monday 25th. So this then creates a nice overlap level. This is a nice overlap support that can be identified as the first support at 1.3946. Right, we can also probably run a Fibonacci retracement here. Let's try it out. Running from here, this swing low on 25th of September, going up to this high here on 26th of November. If we look at all the fibs, let's see if you can see anything. Nope, none of the retracement levels line up with the first support, so that's fine, right? Take note, don't force a Fibonacci analysis or Fibonacci level into the analysis if it doesn't line up with a predefined support or resistance level, right? Okay, and of course, the first resistance has been identified by Fibonacci extension. Right, so to find that extension level, right, we started a retracement from here. This swing high on 5th of August, going down to the swing low on Wednesday, 25th of September. Looking at the key extension levels, we can see that the 161.8% extension sits at 1.4272. So that's how the first resistance has been identified here. All right, so these are the key levels for the dollar CAD. Now we'll move on over to the dollar franc, right? Because on Thursday, 12th of December, we have the Swiss National Bank looking to make a 25 basis point cut, reducing its key policy rate from 1% to 3/4 of a percentage point. And that's quite likely going to cause the franc to weaken further. And that would mean dollar franc is quite likely going to remain elevated as well. So it could rise up towards its pivot level here at 89.52. This pivot level here has been identified as an overlap resistance. And we see recently it formed a nice swing high resistance here on Friday 22nd of November, and after that we see a period of consolidation. Before that we see a period of consolidation here as well, a support here taking place on 5th of July and resistance taking place on 16th of July. This creates a nice overlap level, which is where the swing high resistance was formed as well, right? We see a nice swing high resistance on 22nd November being formed as well. So this level at 89.52 is an overlap resistance, which we have identified as the pivot level here. So should that rate cut take place, right, that's going to weaken the franc even further, and that's likely going to cause dollar franc to rise up towards the pivot level here, right? There's a nice overlap level at 89.52. Higher up, there's another overlap resistance that's accompanied by Fibonacci extension at 161%. So to find that extension, we started a retracement from here. This swing high on 22nd of November, going down to this swing low on the 6th of December. We're looking at the 161% extension. And we can see that it also aligns very well with the overlap resistance here at 90.82. So the first resistance we can see previously was a little bit of resistance here on 2nd of April, and then support here at the end of April and early May, and then resistance once more in mid-May, right? So this creates a nice overlap level, which is accompanied by a Fibonacci extension at 161%. So that's how the first resistance has been identified. Okay, looking at support, right? There's another overlap level at 87.25. Previously, this level functioned as a nice swing high resistance in mid-August, right? You can see as dollar franc retraced higher, right? It stalled at around just under 87.50 and reversed to resume the downtrend. And then on the way up, after making a bullish breakout on Wednesday, 6th of November, we can see the next day the dollar franc found support at this level before bouncing higher. So this then creates a nice another overlap that we can use in identification of the first support. And we see last Friday as well, dollar franc bounced off this level once more. So this creates a very strong overlap level that's also accompanied by Fibonacci retracement at 38.2%. So this 38.2% retracement was found by starting from here, this swing low on the 6th of September, going up to the swing high here on 22nd of November. We can see the 38.2% retracement aligns very well with the overlap support. So take note, we've got CPI data coming up on Wednesday, 11th of December, and we also have the SNB making a rate cut on Thursday, 12th of December. So if we do see hot CPI data on Wednesday, and of course, if we see the S&B move forward with that rate cut, that's going to keep dollar franc elevated, and it's quite likely it would have reached the pivot level at 89.52 by Wednesday or perhaps latest Thursday. Right, so these are the key levels here for dollar franc. And finally, the fourth central bank announcement will be by the ECB. So let's take a look at the euro. Right, so looking at the euro, right, with of course dollar index pulling back earlier, right, during the European session, although now the candle has switched to green. Right, so let's take a look at the euro now. So we can see the euro initially dropped as low as 1.0530 this morning, and then has retraced a little bit higher here. So I see a nice overlap resistance at 1.0615. Right, this is an overlap resistance. Previously, this level functioned as a nice swing low support on 17th of April, and after it broke below this level here on 13th of November, it proceeded to function as resistance on 20th of November, and of course as recently as Friday, 6th of December as well. So this then creates a nice overlap level at 1.0615. So this is an overlap resistance that we have identified as the pivot, and this level here is also accompanied by Fibonacci retracement at 50%. So this retracement level was found by starting from here, starting a retracement from this swing high on 5th of November, going down to the swing low on the 22nd of November. We can see the 50% retracement aligning very well with the overlap resistance, which is the pivot, and also the 78.6% retracement also aligns very well with another overlap level at 1.0787. And we can see here another swing low taking place on 1st of August, and then the second swing low taking place on 24th of October. Then we see a little bit of resistance here in the first week of November as well. So this creates a nice another overlap level, which is accompanied by a Fibonacci retracement at 78.6%. Right, hi Shibito. Yes, definitely we'll be covering gold as well. Right, we've just gone through the dollar index, the Aussie, dollar CAD, dollar franc, and now the euro. And of course, we'll make our way down to the commodities as well. We'll take a look at gold and of course crude oil, along with crude oil. All right, okay, so take note, the pivot level is an overlap resistance that's accompanied by 50% Fibonacci retracement. 78.6% Fibonacci retracement accompanies another overlap resistance, which has been identified as the first resistance. And of course, if we do see CPI come in hotter than expected on Wednesday, 11th of December, that is likely going to create further demand for the US dollar, and that would mean the euro USD is likely to reverse off the pivot and drop towards the swing low support here at 1.0417. 1.0417 is a swing low support level that has taken place on Friday, 22nd of November. All right, now moving on over to the commodities. right? XAU USD is the instrument that tracks spot gold futures, and we can see that crude prices have consolidated at around $2,640 per ounce since last Tuesday, 26th of, or no, since 2 Tuesdays ago, 26th of November, right? So for about nearly a period of about nearly 2 weeks now, gold prices have just consolidated around this level at around $2,640 per ounce. And you can see now it is rising up towards the pivot. The pivot has been identified at $2,713 per ounce. This is a nice overlap resistance level, and we can see previously this level here functioning as support on 23rd of October, and then after that a little bit of resistance here in the first week of November, and a very significant swing high resistance here on 22nd of November. This creates a nice overlap level which we've identified as the pivot, and is also accompanied by a Fibonacci retracement at 78.6%. So this 78.6% retracement was found by starting from the intraday all-time high for spot gold, which was formed on 31st of October at $2,790.10 per ounce, right? And we ended the retracement at this swing low that took place on Thursday, 14th of November. So that's how the 78.6% Fibonacci retracement was found. So we can see here with gold prices rising up towards the pivot level here, and should you be long on gold, you can identify a potential take profit target and around the pivot, which is at $2,713 per ounce. So with gold prices rising up once more here today, after consolidating at around $2,640 since Tuesday, 26th of November, it looks like gold is finally there's some life breathing back into gold prices and is rising up towards the pivot here. So this pivot level here would be a good idea to identify as a potential take profit target for any long trades that you may have. Higher up, of course, the first resistance is at $2,790 per ounce, which is the swing high resistance, where the intraday all-time high was formed on Wednesday, 30th of October. Or is it 30th or 31st of October? Right, in terms of support, looking below at $2,555, right, there's a nice swing low support that has taken place here on 13th of November, and we see a little pullback taking place here on 18th of September as well. So this is a pretty decent support level at 2,555, which is also accompanied by Fibonacci retracement at 50%. Now this 50% retracement level was found by starting from this swing low here on 7th of June, going up to the intraday all-time high on 31st of October, and we can see that at 50% retracement level aligns very well with the first support, right? So these are the key levels here, and also we can see that gold has found support within the green Ichimoku cloud once more, right? A little bit similar to what has happened on Friday, 15th of November, as gold prices fell very sharply at the beginning of November. It stabilized at around $2,560 per ounce within the green Ichimoku cloud, staged a strong rebound, and then it pulled back again at the end of November and stabilized within the green Ichimoku cloud once more, right? And it looks like to be rising up towards the pivot level. Right, so these are the key levels here for gold on the daily time frame. All right, yeah, sure, we can cover on the 1 hour time frame as well. So let's do that. Looking on the 1 hour time frame, right, I would see there's an intermediate resistance level over here, right? This level is at $2,664. That is an intermediate resistance level here, right? We can see a nice swing high resistance being formed on 29th of November, right? This looks to be a pretty key support level, and at the same time we can run a Fibonacci retracement starting from this swing high on 24th of November, going down to the swing low on the 25th of November. Let's look at all the fibs. We can see that this swing high resistance that took place at the end of November is also accompanied by Fibonacci retracement at 50%, right? So this will be a pretty important area to keep an eye on as well, right? Because if we do see gold prices break above the 50% retracement as well as the swing high resistance, right, then we can expect this precious metal to continue to rise higher, All right, let me take a look at where the 70, 61, and 78.6% sit as well. All right, no, okay. All right, let's keep 50%. And where I see another intermediate resistance level is at this overlap level here at 2689. We can see this level previously functioning as pretty decent support on 22nd of November, after which it functioned as resistance here on 25th of November, creating a nice overlap level. So in between where gold is currently trading and the pivot at 2713, we have also identified two intermediate resistance levels. The first of which is at $2,664 per ounce. This is a swing high resistance that's accompanied by Fibonacci retracement at 50%, and a little bit higher. That's another nice decent overlap resistance at 2,689. So take note, should we see gold break above this respective intermediate resistances, we can definitely expect it to rise up towards the pivot at 2,713. Right, so these are the key levels here for spot gold prices, right, on the daily time frame as well as on the 1 hour time frame. All right, okay, so with that, let's move on over to XTI USD, right? XTI USD is the instrument that tracks crude oil futures, right? And we can see that uh, after falling for most parts of last week, right, we can see crude oil prices peaked at around $70.60 per barrel on Wednesday, and since then it has dropped all the way down towards $67.10 per barrel here. But today prices have stabilized, crude prices stabilized at around this level to rise up as high as $68.24. Now it looks to have run into resistance at the pivot level here, and we can see the pivot level here is actually a pullback resistance, right? We see a nice swing low taking place here on Monday, 2nd of December. Nice swing low support here, and it's where, as of now, we see crude oil stall as well. So that's how the pivot has been identified at $68.13. The pivot is a pullback resistance level, and there might be a Fibonacci retracement that we could use as well. But before that, and oops, sorry, this should be the first resistance here. Right, so first resistance is a swing high resistance that has taken place on Wednesday, 4th of December. And also I believe we can run a Fibonacci retracement from this swing high on 4th of December down to the low of 6th of December. Let's take a look at all the fibs. We can see that there's a 23.6%, it's sort of in between the 23 and 38.2%. Perhaps I'll just keep the 38.2% since the candle has already gone beyond the 23.6%. So let's just keep 38%. Right, so we can see a nice pullback resistance level around the pivot, which is also accompanied by Fibonacci retracement at 38.2%. All right, most welcome, Shibito. All right, and let's see if anything else. And for the first support, of course, if we look at XDI USD, there's a significant swing low that has taken place here on 10th of September, Tuesday, right, as crude prices drop from $78.11 per barrel on 27th of August. It dropped very sharply before stabilizing at around $66.50 on 10th of September to stage a pretty decent rebound here. Right, so this is how the first support has been identified, and that's a swing low level at $65.62. This level is also accompanied by Fibonacci extension at 161%. Right, this extension level was found starting from by running a retracement, starting from this swing low on Monday, 2nd of December, going up to the swing high resistance here on Wednesday, 4th of December. Right, so these are the key levels for crude oil. So take note, it's been trading in a strong downtrend since 9th of October, as recently as 9th of October. And if we zoom out, we can see crude prices have dropped significantly, right, from 4th of July as well, and also from the 8th of April, right? We are seeing significant moves or swings rather for crude oil, right? There's a significant swing high resistance taking place here in early April, significant swing low taking place in early June, another swing high resistance in mid-July, swing low here on 9th of August, swing high here on 15th August, another swing low on 26th August, swing high here 28, and so on and so forth. We are seeing uh, large fluctuations for this commodity, highlighting the ongoing volatility for this commodity here, right? But for now, right, we can see that since mid-November, the fluctuations have reduced, right? The size of the moves have reduced. If you look at it, like this, from this peak to trough was a 16.5% decline in oil prices, followed by a very strong rebound from 5th June till 8th of July. We can see crude prices rebounding nearly 16.5%. And then after that, it reversed sharply from 5th of July down to 5th of August, right? So the period of 4 weeks, losing 14.5% once more, and so on and so forth. But we can see that the recent moves in in crude oil has been somewhat subdued compared to what we've observed on experience since April. Right, we can see now like the most recent swing high from peak to trough. Right, this peak from 4th of December going down to the trough of what is this? Sorry, here we go. Since Friday, right? This is just a 5% move here, and then this retracement to the upside from 18 November till 22nd November is also another just 7.4% move as well. So you can see the fluctuations have reduced, the size of the fluctuations have reduced, but nevertheless, you can see that it's still trading in a strong downtrend as well. Continues to trade in a strong downtrend for crude oil prices. Right, and also I can probably identify a pretty decent descending trend line as well. I believe a couple of descending trend lines that we can use. Right, there's one here, and we can see at least 3 touches. First of which taking place on 7th of November, the second touch taking place on 22nd of November, and the third touch taking place on 4th of December. So not only do we have a swing high resistance, also, right, we also have a pretty decent descending trend line. And then higher up, right, there's also another overarching descending trend line as well, beginning on 5th of July, right? We see the first touch here on 5th of July, second touch here on 18th of July, and the third touch on the 8th of October. So we have two separate descending trend lines that we should take note of as well, because a clean break above either of these descending trend lines could highlight a potential shift in momentum, right? As of now, the momentum is to the downside, but any break above either of these descending trend lines could trigger or could signal a significant shift in momentum. All right, so these are the key levels for crude oil. XTI USD is the instrument that tracks the WTI crude oil futures. All right, so we've covered the currency pairs, commodities. Let's move on over to the indices, and we'll touch on Bitcoin as well towards the end. All right, so US 30 is the instrument that tracks the Dow Jones futures, and we can see that this index has made an intraday all-time high. The latest intraday all-time high, I believe, should be on Friday, 29th of November. Let's just do a quick check. 105, 103. No, it's actually on here, 4th of December. 4th of December is where the latest intraday all-time high for US 30 was formed. And we can see that this is a nice resistance level here at around 45,042. And this index pulled back on Thursday and Friday last week, and it seems to be just consolidating of hovering around 44,630 today, right? We can see that it is after falling for 2 consecutive days, it's sort of like just floating around 44,645, but it could pull back towards the pivot at 44,319. This pivot level is a nice pullback support, right? This is a nice pullback support, which was previously functioning as a nice swing high resistance. back on 11th of November, 11 and 12th of November. This was a significant swing high resistance, which finally got broken with this bullish breakout on Monday, 25th of November, and it could now potentially function as a pretty decent pullback support level here. The pivot is also accompanied by a Fibonacci retracement at 38.2%, right? There's a nice 38.2% Fibonacci retracement level accompanying the pullback, which is the pivot. And in terms of first support, there's another overlap level, right? There's the first swing high here taking place on Monday, 21st of October, and a pretty decent swing low taking place here in mid-November. So this creates a nice overlap level at 43,308, which we can identify as the first support. Right. We can probably run another Fibonacci retracement. Let's check it out. Running from here, this swing low on 4th of November, going up to the intraday all-time high on 4th of December. If we look at all the fibs, we can see the 23.6% retracement aligning pretty well with the pivot, and we also see the 50% retracement aligning pretty well with the first support. So let's just keep these two in the analysis, right? And what we have here for the pivot is a Fibonacci confluence, right? We have two Fibonacci levels at a particular price point or a price level. We have the 38.2% retracement and the 23.6% retracement, highlighting or adding further significance to the strength of this pullback support here. Right, so these are the key levels for US 30 on the daily time frame. All right, let's move on over to the DAX. Right, D40 is an instrument that tracks the DAX. DAX has made its latest intraday all-time high today, right, on Monday, 9th of December, and that's at 20,476. This is the latest intraday all-time high for the DAX. If you zoom out, you can see, right, even on the weekly or monthly. Right, let's take a quick look on the monthly chart. We can see, right, yep, the DAX has rebounded very strongly since November of 2023, and of course after this low on October 2022 as well. Right, so the DAX has made an intraday all-time high. Its most latest intraday all-time high today, Monday, 9th of December, and we had used a Fibonacci projection to help us identify a potential resistance barrier, right? With DAX trading around 20,476, right? There's no other level that we can reference. There's no other swing high resistance, overlap, or pullback resistance that we can reference. So in such a scenario, we have to rely on Fibonacci tools such as extensions, projections. So this projection was found starting from point 1, 5th of August, going up to point 2, 17th of October, and ending at point 3, which is on 19th of November. So we have used the 78.6% projection to identify the pivot, a potential resistance barrier, and we have used the 78.6% projection to identify the first resistance, which is at 20,906. Now we can also use a Fibonacci extension, right? To find that extension level, we're going to run a retracement from here, 17th of October, down to this swing low on 19th of November. Key extension levels sit at 127 and 161%. But in this scenario here, at the present moment, we can see the DAX has already climbed above the respective extension levels, so this can no longer be used. But this is just an example of how we can use a Fibonacci extension to help us identify potential resistance barriers as well. But for now, we've used the Fibonacci projection to help us identify the pivot and the first resistance. Now, first support is very clear. First support previously was a major swing high resistance taking place in mid-October, and then once the bullish breakout occurred on Monday, 2nd of December, this swing high resistance can now potentially function as a pullback support level, and that's at 19,681. Right, with the DAX currently pulling back, we can also now run a Fibonacci retracement from this swing low, 19th of November, going up to the high of the day. Right, if we take a look at all the fibs, we can see that the 50% retracement also aligns very well with the first support. So let's just keep that on. Earlier, when markets opened during our markets were trading during the Asia session, we were not able to run this Fibonacci retracement because at that point in time, the DAX was still rising higher. But now we can see clearly it is pulling back quite significantly, quite meaningfully. So that means we can run a Fibonacci retracement from this swing low on 19th of November, coming up to this potential high here on 9th of December here. right? So these are the key levels for D40 on the daily time frame. The D40 is the instrument that tracks the DAX futures. All right, let's move on over to US 500. All right, so similar to the DAX as well, US 500 uh, looks to have stalled at around 6,086, right? 6,086. We can see the intraday all-time high for DAX, for S&P 500. US 500 is the instrument that tracks the S&P 500 futures, and we can see that this instrument made its latest intraday all-time high on Friday, 6th of December, at 6,101.45. Today, it looks to be pulling back as well, and it could fall back towards this the pivot level at 6,026. This is a nice pullback support level. Previously, this level functioned as a nice swing high resistance on 11th of November. Then it functioned as resistance as well on Monday, from Monday 25th till Wednesday 27th of November, right? So this is a pretty decent resistance barrier, which now can potentially function as a pullback support. So that's how the pivot at 6,026 has been identified. We have also run a Fibonacci retracement from this swing low on 4th of November going up to this intraday all-time high on Wednesday 6th of December. We can also see that the 23.6% retracement sits pretty close to the pivot level, and I believe we can run one more retracement as well from this swing low here on 19th of November going up to this intraday all-time high on 6th of December. Let's take a look at all the fibs. There is a 23% here that we can use as well. So let's keep these two retracement levels. And we've also used we can see where the US 500 is stalled. There's also a presence of a 78.6% Fibonacci projection. Right, so we can see 78.6% projection sitting pretty close to where the US 500 has stalled, and we can see the 100% projection sitting at around 6,151. So should we see US 500 pull back towards the pivot and stage a strong rebound, and of course, should it clear the first resistance, the next potential resistance barrier can be identified by the 100% Fibonacci projection. Right, so take note, right? Should we see US 500 continue to climb higher over the next 1 or 2 weeks, right? Then definitely we can use the 100% projection as a potential in the identification of the next potential resistance barrier, right? And we can also probably use a Fibonacci extension to find that extension level. We're going to run a retracement from here. This swing high on 11th of November going down to the swing low on the 19th of November. Key extension levels sit at 127 and 161%. And once again, you can see that these extension levels sit pretty close to where the projection levels have been identified. So we have a Fibonacci confluence at around 6,087. We have a Fibonacci extension at 127% and a Fibonacci projection at 78.6%. And higher up, we have another Fibonacci confluence comprising of the 100% projection and the 161% extension level. So this helps us identify the next potential resistance barrier should we see this first resistance at 6,086 get taken out. But for now, a US 500 is pulling back. It could reach this pivot level at 6,026, which is a pullback support level that's accompanied by two Fibonacci retracements as well, the 23.6% on this uptrend here, and another Fibonacci retracement at 23.6%, beginning from this uptrend on 4th of November. Right, looking a little bit below, right, there's a nice overlap level at 5,870, which has been identified as the first support. Once again, this level previously functioned as resistance here from 14th of October till 30th of October. So a period of 2 weeks, this level functioned as resistance. And once the bullish breakout took place on Wednesday, 6th of November, right, this level then proceeded to function as pretty decent support from 15th of November till 20th of November here. It's a pretty decent swing low being formed here. So this creates a nice overlap level that we have used in the identification of the first support. Right, with this uptrend here, right, I believe we can probably use That's another Fibonacci retracement. Do I see? No, no. Okay, I guess we can probably use the 61.8%. So let's keep 23 and 61.8%. Right, so we can see here there's a pretty decent, this is overlap level at 5,870, which is also accompanied by a Fibonacci retracement at 61.8% here. Right, so these are the key levels for US 500, right after making its intraday all-time high last Friday at 6,101. Today it looks to be pulling back, and if this pullback gains further traction, US 500 could stabilize at around the pivot at 6,026. This is a nice pullback support level that's accompanied by two Fibonacci retracements at 23.6%. First resistance is at 6,086, and of course, should we see US 500 climb higher over the next couple of weeks, right, we can then use this Fibonacci confluence comprising of the 100% projection and 161% extension to identify the next potential barrier here, right? So this could be another potential price target for long US 500 traders. All right, before we continue, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll move on over to Bitcoin and Ethereum, and of course any other instruments that you would like to cover as well. And of course, do remember to smash the like button on YouTube. All right, thanks guys, everyone. Truly appreciate it. All right, okay. So we've covered the indices as well. So let's take a look at Bitcoin. Taking a look at Bitcoin, we can see here the latest intraday all-time high for Bitcoin was formed on Thursday, 5th of December, and that's at $104,030. Right, this is the latest intraday all-time high here, and we can see that this is the level at 100,595. This is where Bitcoin has failed to climb above over the weekend and today as well, right? So since the weekend, it's been restricted under 100,000 and 100,600, and looks to be pulling back towards what I see is a nice overlap level at 91,628. This is a nice overlap support, which previously functioned as resistance in mid-November. Nice swing low bounce here at the end of November, and another nice strong bounce here last Friday. So this creates a nice overlap level. This is an overlap support, which has been identified as the pivot at 91,628. Right, now looking a little bit below, in terms of support, right, actually if you look at Bitcoin, the next major pullback support is actually here at 73,176, and if you look at all the fibs, right, you can see there's not really anything in between, right? There's not really anything in between here in terms of a major support, level. Hang on, let me just get this up, and let's just keep 38% as well. Right, you can see after the overlap level at 91,628, there's no real major support level that we can identify easily, right? The next major pullback level is at 73,176, which is accompanied by 50% retracement. But however, take note that maybe this level here beyond the pivot, there could be a pretty decent support zone here. If you look at it on the 4-hour time frame, right, there may be a pretty decent intermediate support level at around 86,424. And maybe this is something that we'll get to realize over the next couple of days, right? But for now, right, if you look at it on the daily time frame, there's really nothing much in terms of support beyond the pivot, where the pivot, right, at 91,628 very clearly is a strong overlap support that's accompanied by Fibonacci retracement at 23.6%. And then when you look all the way down at 73,200, this is the next major support level, a strong pullback support level that's accompanied by 50% Fibonacci retracement. Right, but otherwise, in between, right, there's not really much between the pivot and the first support, except for perhaps this level here at around 86,424. Right, so these are the key levels here for Bitcoin on the daily time frame. And let's now take a look at Ethereum. Ethereum has just reacted off a multi-swing high resistance, right? Now it has reacted off a swing high resistance that has taken place on 12th of March, and this latest price action now identifies this level as a multi-swing high resistance, and the pivot at 4032 is a multi-swing high resistance, and Ethereum is falling towards an overlap support at 3635. Okay, this is a retracement here, 23.6%. Yep. Okay. And we have a projection. I believe this is a projection. Let me see. Is this a projection? Oh, yes, it is. This is a projection. 100%. Okay. Right, so Ethereum is falling towards an overlap support. Right, this level previously functioned as pretty decent resistance here on 17 June. Then there was a bit of resistance here on 27th November, and then support here on 4th of December, creating a pretty decent overlap level at 3635, which is also accompanied by Fibonacci retracement at 23.6%. Right, so Ethereum is falling towards this level here, and should it stabilize around this around the first support, it could stage another nice rebound. Right, we can see a strong uptrend for Ethereum since 4th of November, but it has just run into resistance. Right, this is a swing high resistance that has taken place on Tuesday, 12th of March at around 4032. This is where the pivot has been identified. Right, beyond this multi-swing high resistance now, this multi-swing high resistance is also accompanied by a Fibonacci projection at 100%. This projection began from 0.1, 4th of November, going up to 0.2, 12th of November, and ending at 0.3, which is at 15th of November. We can see the 100% projection aligning very well with the top of this wick here that occurred on Friday, 6th of December. Right, and beyond that, the next resistance for Ethereum is likely to come in at 4,505. This is a Fibonacci extension. This is a level identified by Fibonacci extension at 127%. So we found this extension by running a retracement from 27th of May going down to this swing low here on 5th of August. And that's how the Fibonacci extension at 127% was identified. Right, so take note, these are the key levels here. All right, okay. If there are no further requests, right? If there's any further requests, do drop them in the chat box. Now, as we approach towards the end of today's session, right? If not, then let's do a quick recap, right? Since we've covered most of the major currency pairs, the dollar index, the commodities and indices, right? So let's take a quick recap. So take note, this is the calendar for this week, right? It's a pretty heavy calendar, right? We've got 4 central bank announcements with the RBA kicking things off on Tuesday, 10th of December, 3:30 a.m. GMT time. They're expected to maintain their cash rate at 4.35%. We also have Governor Michelle Bullock delivering her press conference at 4:30 a.m. GMT. Then on Wednesday, 11th of December, US CPI will be released at 1:30 p.m. GMT, where the forecasts are showing a potential reacceleration in headline CPI. And should we see another month of hotter than expected inflation data, this is quite likely going to strengthen the demand for the US dollar once more. And then later on Wednesday, we have the Bank of Canada potentially making a 50 basis point reduction in its overnight rate, and this is quite likely going to cause the loonie to depreciate further and continue to lift the dollar CAD. And finally, on Thursday, we have the Swiss National Bank and the ECB releasing their respective monetary policy statements. The S&B is expected to cut its key policy rate by 25 basis points, bringing it down to 0.75% on Thursday, 12th December, 8:30 a.m. GMT. And of course, the ECB is also expected to make a rate cut of 25 basis points, and that's going to take place at 1:15 p.m. GMT time, followed by ECB President Christine Lagarde's press conference at 1:45 p.m. GMT. Take note, this press conference is going to have a huge impact on the direction of the euro as well. All right, okay. Hi, Ajay. All right, okay, yeah, we covered dollar CAD earlier, but no worries, we can cover it once more. Right, since we have the Bank of Canada coming up on Wednesday, 11th of December. Now we can see, right, since the end of September, dollar CAD has risen very sharply, right? This means that the Canadian dollar or the loonie has depreciated significantly, right, causing dollar CAD to rise from to reverse from 1.3420 to as high as 1.4182, right, rising more than 5.6% over this period, gaining nearly 750 pips, right? So a huge move over the last couple of months, right? But for today, we can see dollar CAD pulling back. It's pulling back towards the pivot at 1.4093. This is actually a nice pullback support level. Right, we see a nice swing high resistance taking place here on 18th of November. Then we see a little bit of resistance here in early December. So this creates a pretty decent pullback support level at 1.4093. A little bit below, 1.3946 is a significant overlap support. And we see a nice swing high taking place here on 5th of August. We see resistance once more on 1st of November and 7th of November, after which we see a nice swing low taking place here at the third week of November here. So this then creates a nice overlap level, which we can use in the identification of the first support. And of course, first resistance has been identified by Fibonacci extension at 1.4272. This extension level was found by running a retracement from this swing high on 5th of August, going down to the swing low on 25th of September. Right. Let me see if there's a Fibonacci retracement that we can draw as well. Let's try it out. Right, we can run a retracement from here, 25th of September, going up to this high on 26th of November. I guess no, there's nothing really that aligns well with the first support, right? We can see the first support is in between the 23 and 38% retracements. That's fine, right? Don't force a Fibonacci level onto the analysis if it doesn't align well with a predefined resistance or support level. All right, most welcome, Ajay. No worries, most welcome. Right. Okay, so with that, that brings us towards the end of today's webinar. Right, do look out for all upcoming webinars brought to you by IC Markets. Right, we've got a combination of educational and live webinars, live analysis webinars in English, Thai, and Bahasa as well. All right, thanks everyone. Wish you all the best in your trading journey, and looking forward to seeing all of you at the next session. Right, have a great trading week, and catch you all soon.